Have you noticed that when the market goes into crisis, most people panic, but some seem to become even stronger? These people aren't lucky. They're what we call anti-fragile investors, and understanding what that means can completely change the way you invest. Do you know me yet? It's nice to meet you if you don't. I'm Chad, I'm from Zero Markets, and here you will always find content related to the financial market with lots of tips and valuable information without fluff. Stay until the end of this video today, because today I'm going to show you that chaos in the investment market can mean profit. Really big profit. The term anti-fragile comes from the writer and the mathematician Nassim Taleb, the same guy who wrote The Black Swan. He proposed something simple but profound. There are things that break with chaos, things that resist chaos, and others that grow with chaos. The glass is fragile. An iron bar is resilient. But the human body is anti-fragile. You stress it with exercise, for example, and it comes back stronger. The anti-fragile investor does exactly that with the market. He doesn't try to predict chaos. He prepares to profit from it. To keep the explanation quick and direct, let's understand the four main pillars of the anti-fragile investor. Number one, he understands that volatility is not the enemy. It is fuel. The anti-fragile investor does not run from volatility. He learns to use it. When the market drops, he doesn't panic. He sees opportunities. He knows that the price of a good asset falls faster than the company's real value. And it is at this moment that he grows, buying what others are selling out of fear. Number two, he builds portfolios with redundancy and asymmetry. I know it sounds technical, but it's very simple. He does not bet everything on a single path. Part of the portfolio is protected, fixed income, cash, defensive assets. Another part is positioned to win if the unexpected happens, like innovation, cyclical sectors, global opportunities. In other words, the anti-fragile investor never depends on a single scenario to work out. Number three, he thinks in terms of time, not events. The anti-fragile investor understands that the market is made of shocks, crashes, bubbles, and recoveries. Instead of trying to avoid the next scare, he focuses on surviving all of them and taking advantage of what each one brings. It is the opposite of the obsession with the right moment. He doesn't want to predict the future. He wants to be alive to adapt to it. Number four, he feeds on learning. Crises and mistakes do not bring him down. They feed him. While the common investor sees a loss and wants to forget, the anti-fragile investor asks, what is the market trying to teach me? This constant curiosity is what keeps him growing even during bad periods. If you're enjoying this content, how about liking the video, guys? Share it with a few more people and subscribe to the Zero Markets channel. Every week, you find content that's going to make you more critical. After all, studying the market is a basic rule for every successful investor. Being an anti-fragile investor is not about having answers. It's about having structure. It's accepting that the market is chaotic, and that chaos can work in your favor if you know how to react. While the fragile breaks and the resilient merely survives, the anti-fragile strengthens. And in the long term, it's the anti-fragile who turns every crisis into an opportunity. So the next time the market shakes, don't ask yourself, how do I avoid the pain? Ask, how can I grow with it? Or better yet, how can I profit from it?